values as you look out for 2013, sector-wise?
Yeah, first of all, from a big picture perspective, we are finding quite a bit of value in smaller cap names that have outsized growth rates and better valuations or lower multiples. In terms of sectors, we run a sector neutral fund, so we don't really take sector bets versus our benchmark index, the MSCI REIT index. But we are finding unique values in oftentimes smaller cap names that are overlooked by the market that have strong growth rates.
And what are some of those names?
Some of the types of names we like are National Retail, which is a net lease company, has very long net leases with, they're essentially the landlord to convenience stores and restaurants and some types of standalone retail. These companies pay out extremely high cash flow yields or pay out dividend yields that are extremely high. And I think in an environment where people are worried about rising interest rates and duration risk within fixed income, these higher yielding net lease companies like National Retail stand to do very well because we expect that their dividends will rise in excess of or commensurate with GDP, unlike a static coupon that you'd find in the bond market. So investors looking for yield are looking for yield, that really growing yield in this type of a market where there is some concern about rising interest rates.
And generally, would you expect to see rising dividends in a lot of the names you hold? Does that seem to be a trend looking out this year?
Yes, we are seeing positive fundamentals in terms of cash flow, FFO growth, and we do expect that the REITs that we invest in will raise their dividends really commensurate with those growth rates.
What are some of the risks right now in owning REITs?
Some of the risks in owning REITs are the same risks that you see in the broader marketplace. There's political risk, there's cyclical risk. The same types of risks that you really see in investing in equities anywhere. But I will say that REITs really are more muted again to these risks than other types of sectors of the economy. REITs don't have nearly as much cyclicality. In fact, they have contractual cash flow. So only a portion of their cash flow every single year is really subject to what's going on in the economy. And on the political side, we just really don't see a lot of risk with REITs from things that are going on in Washington. So overall, REITs do have the same type of risk that you see in the overall broader marketplace, but we would expect that those risks are much more muted than you'd see elsewhere.
And in terms of economic risk, you also hold a portion of your fund is in malls. There's no worry about consumer spending or issues there?
Yeah, no, we've seen very good fundamentals within malls, and the unique thing about malls is we're just not building very many new malls here in the United States, so there's very limited supply. And when you couple that with moderate to strong demand, very little supply, you get very good fundamentals in the mall space. And we really do like the mall space and really the retail space overall.